Back here in Nigeria, the equities markets closed yesterday on a negative note as the NSE All-Share Index depreciated by minus 0.45% to close at 33,207.02 points, compared with the appreciation of 0.02% recorded the previous day. Now, its year-to-date return currently stands at 18.26%. The depreciation in the index was as a result of the losses recorded in the share prices of financial and consumer stocks like Zenith Bank, First Bank, Guinness, UBA, Access, ETI, Diamond, and Dangote Sugar. The market's capitalization also depreciated by 0.45% to close at 10.62 trillion naira, at about $66.4 billion US dollars. Well, today we'll be taking a look at the performance companies, and to discuss this with me is Esili Eigbe, an analyst with Stanbic IBTC Bank. Hello, Esili. Thank you so much for joining us.
Hi there.
Now, what do you think, or do I say, how would you rate the rivalry between consumer good companies this year?
We're still quite constructive on consumer companies. We think that there's a lot of room for growth. The consumers still spending a bit lower than what we've seen in previous years. There's obviously an effect coming from 2012 when the government did cut down on subsidy, and then you have instability in the northern part of the country, and also flooding towards the end of last year. All of that obviously accumulate to the relatively slow consumer spending that we're seeing. Nonetheless, the companies obviously working on ways to improve their earnings. There's a lot of operating efficiency being pushed through the system, and by that we do expect to see a sustained growth in the sector on average. So we're looking for somewhere around about 17% growth in earnings on average. This is slightly up from the previous year for about 15%. Just to put in context, just the fact that they're able to produce more in the first quarter of 2013 versus 2012, when we had the strike for almost 8 days, is a significant upside for consumer companies.
Oh, well, many believe, consumer goods seem to be overpriced. Is there anyone you think, in particular that's actually reasonably priced at the moment?
Yes, we're still pretty optimistic on UACN. We think it's a genuine reform story. We believe that obviously the company has been in this process for probably the last decade, but the difference here is that they've basically committed to spinning off the individual businesses, bringing in international partners to run those businesses for them. So with respect to where they are on that, as you're quite aware, they did a JV with Tiger Brands a few years ago. That company has done incredibly well. It's doubled its earnings in the last 2 years, and they're transferring a lot of the lessons they learned in that business to some of the other businesses. The core pillars for growth at UAC will remain the food business, the property business, logistics business, and the paint business. Mm-hmm. So they're obviously bringing in, I think, a lot of new initiatives to drive growth there. And we've seen that in the numbers. So, last discussion we had with management, they're quite optimistic on growth in 2012, and they see that obviously coming through as well in 2013.
All right, then. Well, let's start off with the competitions, in some of these companies. Starting off with the brewery sector, the competition dynamics between the Nigerian breweries and Guinness. Last year, the Nigerian breweries gained market share over Guinness, and one of the reasons for this success was because, Nigerian breweries acquired more breweries. How do you think this competition will play out this year?
Well, I really hate to use the word competition because I think that the Nigerian market is pretty big. There's a lot of room for growth. We did a study early this year, basically highlighting the fact that there's roughly about 103 million hectoliters of traditional brew market. This is basically your home brews. And in the formal market or the branded beer market, you have roughly around 21 million hectoliters of beer. So there's a lot of opportunities for a lot of those brewers to tap into that traditional brew opportunity, bring them in either through economy brands and then into their mainstream and premium brands. And so I think that the opportunity is massive, and I think that the brewers now realize it and are starting to exploit that. I think one big thing you're going to see over the medium to long term is the focus to capture this traditional brew market. As you're probably quite aware, Guinness recently launched a new brand called Dubik. The aim is to position Dubik in the affordable market, and there's also talk about within the Diageo group of transferring some of the products they have in some other markets like Kenya or Ghana. In Ghana, they recently launched an economy beer that's produced purely out of cassava. So I think they can obviously transfer knowledge like that into this market and help develop that traditional beer market into a formal branded market. So there's a lot of room or scope for them to grow. But just coming back to your question, I do believe that Nigerian breweries will continue to gain market share in the current year. They have a much more robust coverage, and that will continue to help them within the current environment of a softer consumer spending.